Hello, this is Jordan, and this video is being recorded on the evening of Thursday, May 17th, 2018. And in this video, I'm going to briefly and quickly discuss the US dollar and its current rebound. So in this video, I'm just going to discuss two charts that I have here, and this first one is the weekly candle chart of the dollar index, and it rebounded from 88, which I'm not showing it on this chart, but if you go back far enough, you can see that 88 is significant support because it marks the peaks from 2009 and 2010. Now, the dollar has pushed up through initial resistance right at about 93, and 93, that was a significant low both in early 2015 and early 2016. So the dollar has pushed up through that, and the next resistance would be 94, but really the next really strong resistance looks to be around 95 or 95 and a half or thereabouts. That is very close to the peak towards the end of 2017. And I think I said before, but I'm using a band of long-term moving averages, so they're all coming together there in the 95s. In the very short term, the daily sentiment index is 91% bulls, and even the 20-day average of that is up above 70% bulls. So in the short term, sentiment is definitely running hot. So we're probably going to, there's a risk of a very short-term pullback or at least a pause over the next week or two. Now the COT, I have not looked at that in a week or two, but I believe it's likely to support more gains. So that's probably what sentiment's telling us. So from looking at this chart, it looks like 95 is an excellent upside target. And one of those moving averages that we used in the last chart was the equivalent or close to the equivalent of the 40-month moving average, which is just below 96 right now. If we round up, you could say it's at 96. And this is a history of the dollar index going back to 1978. And we could see that the 40-month moving average has worked really well as support and resistance, especially since the late 90s. So, but one thing to note is that it hasn't always worked out perfectly. I mean, look at the action from 2008 to 2012, and then the action from the late 80s into the early 90s. So the dollar has, I mean, it's had two obvious, clear bear markets, but that doesn't tell us anything about how what's going on here so far. Now, if the dollar were to roll over around that resistance and go below 88, then it's clear that it's in a bear market. But I guess my point is it's just, I mean, it can be somewhere in between if you look at those periods that I just mentioned, 2008 to 2012, and then the late 80s and early 90s. I mean, you can have a lot of sharp moves in both directions. So don't be surprised if the dollar goes through that 40-month moving average, makes a sharp move higher, and then makes a sharp move lower after that. I mean, I know it's simple to say, but I'm just pointing out that that kind of action has happened during quite a bit of the dollar's history. So it's really too early to know what's going to happen, but I think we're going to rally up into the 95s eventually, and that'll be a test for the dollar. So we'll see what happens there. I mean, another scenario is it could roll over at 96, but then come back down and make a double bottom at 88, where it just bottomed. So, but to repeat myself, I see the dollar trending up to the 40-month moving average just below 96, and that band of moving averages in the mid-95s. So that seems like a strong target to me. And from there, we'll see what happens. We'll see how sentiment looks. And that's all. This is just a short video for you. You can follow all my work at thedailygold.com, and you can consider subscribing to my premium newsletter there. It's only $149 for 6 months. That's at thedailygold.com/premium. And if you want to know which junior gold companies really have the goods and the best potential, you can sign up for our service. It's highly affordable. Thank you for listening and watching this video. I really appreciate it, and I look forward to doing another video update for you in the next week or two. Thank you.